It's zero. This is the biggest credit bubble in stock currency, goes to infinity. So I really just don't see the point of saying it's going to be $8,000 or whatever. But, we live in a world of macroeconomic expectations, if you like, where everything works off computer models and spreadsheets and all the rest of it. And, you can just sort of put in your inputs and you adjust the inputs, do this, do that, and you end up with a computed answer, which has actually got absolutely nothing to do with reality. So that would be my criticism of the report. But having said that, I think the origin of reports like this comes from confused analysts wondering, why is it that central banks are buying gold? I mean, after all, they think that their currency, whether it's the euro or whether it's dollars or whatever, for them, that's money. That's money. Gold is no experience in the 1970s was the reverse of what you just described. Basically, we went into the 1970s with the Fed funds rate at something like 3.75%. I mean, it varied a bit around about the beginning of the 70s. And gold was around about $35. We came out of the 70s, and in 1981, gold was $850 at one stage on one morning fix, and the Fed funds rate was 19%. The correlation was the opposite of what people believe today. I think that the way to describe it is that the 70s was a period of great concern about the value of fiat currencies after the end of the Bretton Woods system, after the failure of the Bretton Woods system. So, you had this sort of situation where we're definitely in a very, very powerful commodities bull market, exacerbated by Trump's war on Iran, which has created all sorts of economic distortions. It's taken a wide swathe of commodities off the market. And, we're also talking about things like agri-products and all the rest of it because of the restrictions on sulfur and sulfuric acid, which are important for fertilizers. It's also important for the refining of non-ferrous ores, including silver, incidentally. So you can see that while we can see that there's a problem ahead, the assumption at the moment is that this problem isn't all that great, because once Hormuz is opened, we'll all go back to normal. That is the assumption in the markets. Basically, what markets are telling us is that interest rates may not go down.
What Alasdair Macleod just laid out is a chilling forecast. The biggest bubble in human history is poised to pop, with fiat currencies heading to zero. Macleod, the renowned head of research at GoldMoney, argues that a government-driven economic collapse is not just possible, but inevitable, echoing the inflationary nightmares of the 1970s. He points to the staggering dependency of some 45,000 consumer products on the price of oil, illustrating just how fragile our interconnected global economy truly is. This isn't just theory for Macleod. He openly states he wants to see the collapse and get it over and done with, acknowledging his own family considerations. As we grapple with the implications of a gold and stock market collapse, the question isn't if, but when, and what you can do to protect your wealth. Next, we'll dive into the specifics of how this plays out and what the smart money is doing right now.
Know what they're doing. Central bankers in the Asian markets in particular are just getting the hell out of it. Do you really dispute that? Does it really matter if, let's say, the gold price goes down to $4,000 or something like that? I mean, God, you say, well, thank God for that. I can get out of these damn dollars. That's actually what you should be looking at. This idea that you're going to trade this, forget it. This is not a market for trading. It's a market for protecting yourself. Just get the hell out of risk. Understand where that risk is and just get out of it. So I
But
don't care.
to play devil's
I really
advocate,
don't care what the price is. I really don't. It doesn't matter.
The Central Bank of Turkey, of course, has been selling, also swapping, buying back again. But the Central Bank of Russia has also been reducing its gold position. And then again, China has been for 18 months in a row has been buying. So just want to also bring another perspective.
It looked bigger than 1929 to 1932. That was what followed the the roaring 20s of the last 2 years of the 1920s. I mean, when this one goes pop, there's going to be disaster, absolute disaster. And then you have to ask yourself, what is the central bank, Mr. Walsh, going to do about it? Is he going to insist on, doing quantitative tightening to get the balance sheet back into some sort of order? I don't think so. I think he will be tasked with basically trying to save the system, which means print. Yeah, he's going to. I mean, you think you've seen QE? It'll be nothing compared with what's required to try and rescue the entire system. And of course, the other side of that is the government's obligation in the form of its bonds or T-bills or whatever, and it's just going to be unfundable. Who's going to? I mean, what do you think you've seen QE? It'll be nothing compared with what's required to try and rescue the entire system. And of course, the other side of that is the government's obligation in the form of its bonds or T-bills or whatever. And it's just going to be unfundable. Who's going to, I mean, what foreigner is going to buy this? And if the foreigners aren't buying it, the smarter money in America isn't going to buy it either. So we've got debt traps waiting to be sprung. And you made the point earlier that, you know, the debt levels now, government debt levels are just off the charts. I mean, they really are. And it means that any slowdown, any slump in the economy, which is really what we do face as a result of Hormuz, any slump and attendant rises in consumer prices, basically it just pushes everybody into a debt trap. They become unfundable. And the collapse, look, we're going to hell in a handcart anyway. It doesn't mean we die. It means that the government dies. So let's get it over and done with. So that's one attitude which I would, well, not entirely support, but sort of produce, if you like, as a justification for staying here. The other thing is I've got family here, and you can't abandon your family. And I know your wife, Paul, is very, very smart because I've met her, and she's
smart and beautiful.
She's smarter than the average housewife. Let's put it that way. But the average housewife, the average wife or partner of someone like me, doesn't actually believe what we're saying. You can't get, you can't get your family to understand what is going on. So.
Why not? Because my wife listens to the podcast. Sometimes I advise her not to do it, but she does listen. But I assume your wife is not listening.
So when you really see the dangers that we're discussing, for people to really understand what we're talking about, they're in denial. They're just not interested. I mean, they think we're being so gloomy. Life isn't about sort of, we want to be out. We want to, have fun. We've got other responsibilities. We've got to look after them. We've got to worry about other things and all the rest of it. And this is the problem I think we have, trying to get the message over that, when it comes to your own wealth, it becomes not a time of trying to accumulate wealth, which is the way most people look at gold. They think gold is going up, so, in dollars or euros or sterling, I'm going to be rich. That is completely wrong. The reason you've got to get into gold is to protect yourself from the calamity that is coming, and that calamity will be reflected in currencies.
Alasdair Macleod just laid it out. Central bankers are trapped, recklessly printing money while the global financial system teeters on the edge. He's not just talking about a market correction, he's describing a post-mortem on a structure that is already failing, with fiat currencies heading to zero and gold's value going to infinity. We're seeing seismic institutional shifts, with nations like Russia and China actively moving away from the dollar and accumulating physical gold at an unprecedented pace. What happens when the buyer of last resort stops showing up and the world's reserve currency has no one to buy its debt? The implications for your savings and your future are profound. This isn't just about the price of gold, it's about the very foundation of wealth preservation in a world where governments are acting with irresponsible abandon. The biggest bubble in human history is staring us down, and the gold and stock market collapse isn't a distant threat, but a looming reality. So the real question is, do you want to be the person who understood this early, or the one who explains it to their accountant later?